What is up, guys? It is Cage here, and welcome back to episode 3 of my trading journey towards prop firm payouts. In the last episode, we have taken an amazing trade with a good result. If you have not seen that episode yet and you want to know how and why I took that trade, then definitely check it out. I will put the link in the description. As you will see in the background, this trade is running and it is indeed a stop loss. What I can say about this trade is it is not that well managed and I should not have taken this trade at all. I will go over the technicals of the trade, why I should not have taken it, but why I did take it. And let's see what happens in the technicals. But first, let's go over the Excel sheet and see what happened there. Looking at the Excel sheet, in this trade, I've taken 4 contracts, another 0.5 risk, a $250 risk of the account, and the end result is minus 240. That's basically the 0.5 risk that I took. This is what the wallet is at now, which is still a really nice number because our last trade was really good. This is how you can manage with risk management. You can take 3 losses in a row and another good W and you'll still be fine. I've not added a text yet on the add-on, but that is what this video is for. So let's go over the technicals and see what happened in the trade. Let's go over some market structure on why I should not have taken this trade. In fact, I didn't even analyze this while I was trading that day. Not sure why, but it's really a note I have to write down. Looking at the daily time frame, we have a massive fair value gap holding us down. Yes, this market loves testing for value gaps and that's why I use it. It's pretty much a supply. Keeping in mind, we have this massive PO3 coming down, and what happens in a PO3? It's likely you can expect some follow through. So what will happen is when you reach the target of your PO3, you will stribble back up and then you will make another distribution here and then get a move towards the downside again. Again, this is not what I thought in the moment. This is what I'm analyzing right now, but I did not check it at the time of taking the trade. So, looking at the 6 hours, what is our market structure? It's a low, it's a lower high, and a lower low. So what is expectation order flow? That is another lower high for another lower low. Then going closer to the 1 hour, what is our market structure? It is a low, a high, and a lower low. So everything what happens in between is internal, but our expectation order flow is still another lower high for another lower low. While the high time frame structure was pointing down, we've also created a distribution at the highs here. This is also a strategy I use in crypto. So if you want to know more about that, then definitely check out my other videos. And after this distribution, let's draw in our market structure. A low, a high, a lower high, and another lower low. So everything what happens again in between is internal structure, but our expectational order flow is pointing down. So going over all these aspects of the trend being down, you should never be able to take a long in between that. You should wait for these pullbacks and try and short at the top, because that is your high time frame order flow and your high time frame trend is your friend. So let's go over this entry on why I took this trade. We have a low, we have a high, we've made a higher low and another higher high. And as I always say, when we leave open liquidity on the bottom, the expectation is to grab liquidity on the top, which was for me this target. But this was also our swing to protect in our downtrend. So it wasn't really thought out that well, which what definitely is a problem. But this was the thought process in the moment. So let's just go over the trade based off of that. So our external expectation is another higher low for another higher high. And we have accumulated here because when you make a high and a low and you start moving in between and we're deviating each side, we can draw in a range. Let's put our touch point in here, 2 touch points in, and basically 3 taps. So you have one below, you can have another one over here or another one over here for complete schematic and a rotation towards the highs. But this is good context. This would have been good in a good context, in a good strong uptrend, but that's not what we're in. So that's why I can already tell it has not reached our technical target. And also, My take profit wasn't even on the technical target. So that's another point to write down there. What I am really proud of is this local entry and this local price action reading. So let's go over it. We have deviated the low. So what do we have to expect for an order to grab liquidity on the highs? Well, leave liquidity open on the lows. We've made a low, we've made a high, a higher low, and then over here we've broke above, made a higher high, and then we put the order on the expectation of another higher low for another higher high, which has happened, but the management of the trade wasn't good, so that's why this still ended out in a stop loss. What I like about this, you had this huge 1 minute range phase. We have taken the highs which caused a lot of buyers to step in and FOMO into this position. So what happened is the buyers that has stepped in here will put their stop loss below the lows. So what the market makers did is we've taken out the high and we straight out came for that low. And what we did then is all the liquidity between this grindy price action here was gone. And the market makers had a clear point of going towards a direction right now, which was the highs, because after we took out all the liquidity, we went on and took a high. And when we take liquidity on one side, we have to build it up on another. So after this new high, our expectation was that this low was going to be protected and this high was going to get broken again. So we put the order in the fair value gap, placed the stop loss below the low, and let it run towards this high right here. So as you can see on the replay, this is also where the stop loss hit it, because our expectational order flow was just going down, so we didn't have to take that high. So that was the worst mistake made here. And we should have put a TP here, because what happened here locally was correct. There were clearly signs of being you have to grab liquidity on the top side, and that's exactly what we did, but that's also where your stop loss should have been. But that is also where your target should have been. This was another trade recap, guys. Hope you guys enjoyed it. Episode 3 of my trading journey towards proper firm payouts will be up soon, because we have already taken that trade and I'm already working on the recap of it. See you in the next one.